Hi everyone, welcome back. Market Video Analytics, our weekly session powered by Light Forex Broker. I'm Cuzin, your host. Every week, every Tuesday, we have our market analytics session. Today, I'm going to take you to a special place. This is the euro dollar, the most tradable asset in the world by a large stretch, by the way. It is the euro dollar. And I'm going to give you a full, very comprehensive analysis. And we're going to take a look at the euro dollar from 4 different angles, right? So it's going to be really interesting. Stick around as we take the euro dollar under the microscope. All right, so obviously the euro dollar consists of 2 currencies, right? It's the euro and the US dollar. Now, if this pair, the euro dollar, move upwards, it means that the euro is getting stronger in relation to the US dollar and vice versa. If this pair is going downwards, it's the US dollar that is getting stronger over the euro. That's pretty simple, right? Now, I would like to break down the analysis here into 4 aspects. We're going to look at the fundamental aspect, right? We're going to have a fundamental analysis, if you will, or fundamental overview on the US dollar specifically and on the euro, and then we'll take it to the charts. We're going to analyze the technical picture for the euro and the technical picture for the US dollar. In that sense, we can play a little game that we can assign 1 point for every one of these aspects, right? Because we want to get the bottom line, which is where the euro is more likely to go in the foreseeable future. That's the bottom line. That's all we want to solve that problem. That's for sure. Once we solve that problem, we know how what kind of trades to put in, what kind of positions to hold, right? So from a fundamental point of view, let me talk a little bit about the euro the way I see it, right? Kind of a fundamental overview. Because I find both the economical and the political, also the demographical situation in Europe, a huge mess, right? From a fundamental point of view, the euro is in a serious trouble, right? We see the political shift from left, center to right. We see that all across the countries. We have protests now in a lot of countries. There's a big turmoil when it comes to the political space. And also economically, the last years, ever since 2010, probably even 2008, the Eurozone has huge economic problems, right? It's basically stagnant. It shows no growth, and that should put a lot of pressure on the euro from above, right? Basically, put a downside pressure on the euro. So this is from a fundamental aspect. I'm talking only about the euro now. Now, in comparison, if we talk about the US dollar, it's pretty much the opposite, because if you think about it, ever since Trump took office, it pretty much reversed the whole economic situation 180 degrees, by executive orders, by its sheer policies, all the trade deals that he was basically canceling and redoing, bringing lots of jobs back to the economy, lots of changes, and we saw the growth triple and even quadruple just in the past couple of years, ever since he took office. So it looks like from the fundamental point of view, the US dollar should continue to rise, should continue to get stronger as the US economy is becoming better and better, right? Now, from the political point of view, it's not perfect, but it's definitely not the situation we have in Europe, right? Far better from a political and demographical aspect. So if I would assign 1 point to each one of these analyses from the fundamental point of view, I would give the US dollar 2 points, right? I mean, the euro, I'm going to subtract 1 point from fundamental point of view, and we're going to give the dollar 1 point from the fundamental point of view. So we have 2 points to 0 in terms of shorting the euro dollar, right? That's from the fundamental point of view. Now, I'm going to take it to the technical picture, which is actually more interesting, to me at least, because, you know, the fundamental aspect is more of a long-term aspect, right? It's kind of the underlying powers that drive the trend, but we're talking about usually long-term 3 to 5 years. Well, we want to zoom in a little bit. We want to fine-tune it. So we're going to use our technical skills, right? The technical analysis is, you know, we focus the technical analysis into the next few months, I should say, up to a year. And this is where we can zoom in with regards to actual trading activities, placing a position. Now, let me be frank here. I actually just a couple of hours ago pulled the trigger and established a bearish position on the euro dollar. But I have to say this, I entered prematurely, according to my own standards. I entered a little bit prematurely because I have an official kind of key level, an official trigger, that once triggered, is going to be an official bearish conviction. I kind of jumped the trigger, basically, because I feel pretty strongly about this bearish conviction, but I have to say also that I started very, very small because of that. Now, here's the technical situation. The euro dollar, and I want to refer you to this particular key level, 114.17. Take a look at this level. This is my main point of reference, although you can see that there are other key levels, right? We have the symmetric key levels here. Mostly I'm talking about this one, my main point of reference, but we also have a Fibonacci projection levels, the blue and the green, and I'm going to talk about them very soon. What you can also see is that I've already marked a very interesting phenomenon here, right? So I'm talking about this 114.17. Just remember, this is a natural symmetric key level, right? And it's according to the bigger picture, to a setup coming from the monthly chart. I'm going to show you that as well. But here's what I found to be really, really interesting, just from a technical point of view right now I'm talking about. Price, on its way down, I mean, it was trading at around 24, 25. It came from 25. That was about a year ago. And it challenged that same key level, 14.17, the first time. That was a few months ago. Now, it looks like it was successful on breaking through, but if you take it to the monthly chart to filter out, we find out that this was a bit of an excess noise. In fact, it did not break that particular key level. It just spiked it from a monthly perspective. Having said that, there was a second attempt, right? Just a few, probably a couple of months later, price had broke below 14.17 for the second time. This time it was actually a genuine breakdown. Let me quickly show you what I'm talking about. Now, here is what I referred to earlier, right? As the move that was basically noisy. We saw that from the weekly perspective. Now you can see it was just a spike. Basically, price completely bounced off that level, right? Just to show you how powerful it is, the 114.17. And this is the genuine breakdown, right? So we got a monthly confirmation, but not only a monthly confirmation. You know, monthly confirmation is the highest authority, right? Showing us price after challenges, it actually made it and broke below 114.17. And also, you know, just I'm talking about last week, that was a reconfirmation coming from below. Price, after established itself below that key level, was actually challenging from below, trying to break through and failing, leaving a spike here. This could be a strong indication that this 114.17 is a very important pivotal point, which got, well, the euro dollar seems to overcame that key level, and if that is a pivotal point, a point of no return, then we all know what are the implications here. Price will just continue on the way down. However, I want to show you another interesting element here. I'm going to take it to the weekly chart again. You know, when price was trying to to challenge that 114.17, we saw that on the monthly perspective left just a spike, but here we can actually see a few attempts. Let's take a look at that. This is really interesting stuff. So we had the first attempt right here, followed by the second, right? And then the third, take a look. And then the fourth, we're talking weeks here, guys. Then a little bit of a break, and right at the fifth. And even today, I mean, even this week just started already. Take a look, unbelievable, right? 6 attempts. You almost call them consecutive, 6 consecutive attempts, trying to bully this particular key level. But as you can see, all of which failing to break through. I think this speaks volume, right? I think the euro dollar is trying to tell us something. Now, here's another interesting point. On the way up, when it began to reverse, it actually began to form a head and shoulders pattern. Now, it's not the most obvious head and shoulders pattern because of the massive head. But this is the best head and shoulders pattern you can find. The bigger the head in relation to the shoulders, the better. This is a simple fact, guys. Take a look at this massive head, right? We have the left shoulder right here. This is the head, huge head. And this should be the right shoulder, right? Now, if I were to cross, a neckline, this is how it would look like. Converging very conveniently, converging with the blue dotted line here. Now, what is that blue dotted line, you ask, right? That blue dotted line is actually a very important projection level. It is the 1.236 projection analysis, Fibonacci projection measurement on the head, right? Every time you see a head and shoulders pattern, you have to focus on the head. You want to know, what is the likelihood of this downside reversal, right? I mean, how low will it go? How far will it go? That's what we're trying to figure out. So we're measuring the head, right? And this is the 1.236. And I want you to see the amazing reaction we had here also from above. Take a look. So obviously, right, you can see lots of respect price gave that key level, 1.236 Fibonacci key level this time. It's not a symmetric setup key level, it's a Fibonacci key level. Now, price seems to be trapped between these two levels for probably 6 or 7 weeks now, right? Ever since it broke below 114.17, it's trapped between these two lines. So this is my official trigger level, as I've mentioned before. I said I jumped the gun a little bit because of the reaction I saw on that 114.17 from below, especially this one, right? This week with that spike here and beginning to fall. I think that, this flirtation, this, massive flirtation with that key level should be over. I think it's time for it to be over. But price is obviously still trapped between these two levels. So I took a small trade, right? A very small position, just the first trade in what I intend to build up. Eventually I intend to build up a big position, just increase the position, but I will begin to increasing this position significantly only when price can prove that it could break below 113.17, right? The 1.236 Fibonacci projection level that acts as a strong support right now. And also, of course, you can count in also the neckline, right? Obviously, I consider the neckline as a weak element. This is just a manually drawn trend line, basically, as opposed to a solid Fibonacci key level. Anyway, they converge pretty much the same point, so we're going to be looking at this. But like I said, once price can break below 113.17 with a weekly confirmation, that's going to be my cue to significantly increase my bearish position here. On the other hand, if it's going to break above 114.17, right, that will reverse my whole conviction. I will have to close my position immediately. So that's my defense element, that 114.17, guys. All right, very important to understand. So it looks like from technical point of view, we are on the downside, right? It's pretty strong. I have to say the technical picture is pretty strong, pointing out for further downside movements. And once price breaks below 113.17, I don't see any other obstacles that should block, that negative momentum, negative sentiment. And I have to mention this particular level, 109.35, because that is my official price target. Now, it is my official price target mostly because it is the next Fibonacci projection level, 1.618. All right, and it's actually a more important one. It's the most important projection key level, still measured on the same move, right? The head, basically. 1.618 should be the long-term, kind of medium to long-term price target. So there you go. I'm building up a bearish conviction on the euro. So we got two fundamentals, right? Pro dollar, negative euro. That's 2 points, right? I'm going back to that little game we're doing here. Technical picture definitely negative for the euro, right? So that's that would be 3 points for the US dollar, right? Short on the euro. Let me take you, just to seal this analytics, let me take you to the fourth angle, as I've promised, this time on the dollar index. Alright guys, so this is the fourth angle, right? So we took two angles from a fundamental point of view, both on the dollar and the euro, separately. Now we're doing the same process from a technical point of view. We've just analyzed the euro, right? Now we're going to analyze just the dollar index separately. And we saw the euro with the implications on the downside from all angles. Now we take a look at the US dollar. Technical picture points out for further upside move, guys, right? This one is bullish. Now I'm saying this because there's a pretty solid trading range that's been developing over the last probably 3 years, right? Probably even 4 years. Make it 4 years actually, from pretty much the end of 2014. And this is the classic movement that I always like to work with, right? I can easily place my symmetric setup here and begin to dissect the individual legs here, which is exactly what I did. Now, last time I checked, price came from below. I mean, it seemingly broke below that key, the bottom key level, and got basically out of the setup for just a couple of months, actually 1 month. Only 1 month. It was managed to close below. I think it was an excess noise here, since it is a monthly setup. It quickly came back in, right? And not only came back in, take a look at this. This was actually a confirmation for me that the setup was very much valid. It was very much intact, because I was ready to throw this, out the window. But when I saw how price was trying to break back below, and I'm talking about this particular bar, right? March 2018, it just left a spike and went back in. And then, boom, the turnaround and the breakaway, right? The move away from that bottom key level, 89.89. That was pretty important in terms of behavior. I thought to myself that at this point the setup is very much, it's alive and kicking, so to speak. Later on, I had a second test level, right? A second test period where I was, I was waiting to see how price will react to the next symmetric level. In this case, this is the mid-low key level, 93.95. And to my surprise, it was extremely reactive. At first, it broke at very, very undecisively, I should say, with a very small margin, but it still closed a little bit above 93.95, which I marked as a break. Basically, I did mark it as a break above that key level, and just consider to hold my bullish conviction at that point. What it did the following month, or even 2 months, was even more impressive. That was a huge reconfirmation, guys, that it broke that 93.95. Take a look this time, spiking it from above. So just think about it. It was trading below that level for quite some time, but as the month progressed, it came back up, closed above, and the following month, yet again, just a slight touch base here. Really interesting stuff. Then it started to pick up the pace on the upside. It began to move away. At some point, it reached almost the other side of the setup. But then it went for pretty aggressive downside correction, but not as aggressive as to break below the 93.95 again. It was basically just retesting that level again from above, leaving another spike here. When I saw that and the bounce back, I knew that the downside correction was over. We're back on the upside, and we're going to hit the upper section at some point, sooner or later. Now, as you can see, we're stalling a little bit in mid-air. I'm talking about the last couple of months. But the direction is pretty clear. After, the retest on the 93.95, we should be hitting the 98.50 at the minimum. That should be the minimum level. I actually believe that since we may be looking at the breaking out leg here. So this leg may actually break the whole setup, break above the top key level 102.54, and just begin, just continue the grand trend. When I say grand trend, I'm talking about the big trend coming from below, actually. This whole system, this whole trading range, if you will, sideways movement, don't forget, it came from below, right? So the grand trend is up. Now, if you talk about the major trend, one scale below, that's also up. And I think it should hit the 98.50 at the very minimum, probably even going all the way to 102.54 and challenging that level as well. We'll see how that goes. So technical picture, very bullish for the US dollar, for the dollar index, right? Also enhancing my bearish conviction on the euro dollar, on the pair, on the euro dollar, which is why I think the score should be here 4-0 in favor of a short position on the euro dollar, guys. This is probably should be the bottom line of this video session, video analytics anyway. So yeah, there you go. I just shared with you my main decision, kind of my decision making process in engaging with a short position on the euro. Like I said, it is very much, I see it as a very important that it would break below that trigger level I was mentioning at 113.17. Once it does that, I will be here to follow up and keep you posted. So there you go. Alright guys, I hope you enjoyed the session. Don't forget, for those of you who are not subscribed yet, for any reason, crazy reason there is, subscribe now, join this group, and voice. We will love to hear what you have to say. So if you have comments, questions, don't forget to write them down in the comment section. And that's that. Till next time, be well.